Hey everyone, welcome back to the channel. So I've had a lot of people contacting me asking me about funding talent and trying to explain or break down their new rules on the Edge especially. Obviously when they've moved all of the people from their challenge account over to Edge account, it's been a massive change for a lot of people, and they really are a little bit worried about trading because I think it's so easy to break some of the rules we've put in place, especially around the consistency. So I thought I'd have a quick look and try and break it down for you. So before we get going, please make sure you hit that subscribe button, give the video a nice big thumbs up, and comment down below if you're looking to move away from funding talent to other prop firms, or if you're going to stick with them for now. So what Funding Talent have done recently is changed all of the wording on their website to move it away from being a trading thing, more of a educational real world simulation. Now I've got no problem with them being honest and open and saying that we're not trading live money, providing they actually pay out the actual money that people have earned throughout all the challenge phases. Now as we know, they've changed away from that model and gone to the Edge, but what they're describing is trying to get the edge for the trader. Make sure they're consistent, make sure they stick to a set of rules so that the trader themselves are consistent with an edge. Now we often refer to edge as we have over, let's say, casinos, but unfortunately it's the casino who has the edge over the gambler. Now the edge is really clear when you start playing roulette. Now if you're just placing red or black, because it's a 50-50 win ratio, eventually if you always stuck to the same color, red or black, eventually it will come round to you and you will get a win. And you get onto a roll if you do it over 100 times, and you're likely to get a 50-50. But unfortunately the edge for the casino is the green. And there's one on the board, whereas if it comes on that one, therefore it's on their side. It's stacked in favor of them. So whether it's 5 spins, 10 spins, 1,000 spins, the house or the casino will always win. And I think that's what Funding Talent have done. They've actually changed their rules to give them a slight edge. Let's check out the website, break it down, have a real closer look at all of the consistency rules for edge traders. So first thing, just looking at the home page, if we scroll down, it's very clear this is now a simulated learning experience. Funding Talent is a unique pay and play educational game that allows you to earn real money in a risk-free environment. But it was also clear on their website they're only really promoting the Flex accounts at the moment. There's no way of actually signing up for the Edge account. So going into the Edge model, they're really keen to upsell this, really trying to look at the positives of trying to maintain consistency and sticking to a set of rules. And obviously they believe that traders will absolutely love it. So I can see that no evaluation targets is a definite benefit. The option of daily payouts and risk-free learning incentives. Therefore, if you do actually go and break some of the rules, you're not losing your own money. But that's the same with all the other prop firms out there. So how it works, choose from 25,000 or 100,000 fictitious capital, get started, and obviously follow the rules and get paid. Build up simulated profits on the demo account and cash them in for real money when required. So here we are on the rules. Let's take a closer look at all of the actual fundamentals we need to stick to as edge traders. So I think max day loss is fairly clear. They're just obviously allowing a loss of 5%. And that does scale. So it says here, if you've made a $5,000 profit in that day, then your specific daily risk will actually increase to 10,000. But again, once you go over the next day, it resets back to the 5,000, fairly standard. Max overall loss, 10% or $10,000. So from the starting point of a $100,000 account, you can never run below $90,000 at any point. Otherwise, the account will be closed, fairly standard. So with the payout structures, people got really upset with them, now saying that you can only earn 25% of the simulated profits made. So let's say on a $100,000 account, you make 10%. So $10,000, you're only going to get 25% or $2,500 of that, compared to the challenge model, which was 80%. Now this is where I think it gets really confusing, the max rewards. So on a $100,000 account, your maximum payout on a daily basis is $1,250 or $15,000 per month, which on the surface of it seems okay. They're trying to discourage people from gambling and setting almost realistic targets. Now, 1.25% on a daily basis is actually okay if you're looking at good risk management, but at the same time, that's only a 25%. So to get that payout, you actually need to be making 5% in a day to be able to claim that 1,250. And so already we can see we're going to have a lot of people over risking and overstretching to try and get to a point where they can be taking out that 1,250 daily payment. But again, the 5% target a day is absolutely massive. I'm not sure most traders who are trying to be consistent and sticking to a set of rules and risk management would be able to make that. So EAs and trade copiers, so again, general rule of thumb, because Edge is trying to educate and empower users to be able to do their own trading, they obviously try not to let people run EAs and trade copiers. So far it's all very standard, 5% daily loss, 10% max drawdown, and a worse profit split than before. But I think where you get into the consistency rules, that really becomes confusing of what you can actually do and where they will be changing the edge in their favor to try and, I won't say trick traders out, but again, make traders think a lot closer about the trades they're placing and how they're actually doing their strategies. So I think this lot size is really confusing and also quite bad. So the maximum position size should be no more than double the lowest position size. So let's say you're a swing trader and you are trading out one lot size, but you have a stop loss of 100. So therefore you're at 1% risk, which is fine. That is a great trade to be in. But during the day you see a great breakout and you want to have a stop loss, let's say at 20 pips away, and you're going to go with a 4 lot size trade. Now that in itself would actually break the rule because you can only have double what your minimum is. So your minimum was 1 and therefore now you're going with a 4. You're breaking the rules, but overall your risk per trade is still only at 1% or less than 1%. And as we know as traders, we often place all sorts of lot sizes, depending on what we're going to trade, whether it's Forex or gold or crypto or whatever it is, lot sizes vary. And so to restrict people to only choosing double the lowest lot size they've got already sized is a bit poor. So the different asset classes tries to expand on that by saying that lot size consistency only applies to the instruments you're trading. But again, different Forex pairs have different ranges, and therefore your lot sizes will be different depending on what you want to trade. Now the pacing objective is again really bizarre, and I'm not sure what they're trying to achieve here, because again, as traders we could be just breakout traders and getting massive profits from very quick breakouts, and as such only saying that 25% of your simulated profits should be realized within a 15-minute window each day. So let's say I place one trade and it is a very, very fast trade, and that's all my profit is done within a very short period of time. That could be my one trade for the day and I could be out. And I've had plenty of trades I've got in, let's say around a news article. Non-farm payroll is a prime example. You can get in very quickly and out very quickly, and within 1 or 2 minutes you could have made significant profits. But here they're saying if you make $100 in simulated profit on the account, no more than $25 should be made or closed out within 15 minutes. So let's say I place a trade, news article comes along, hits my take profit, I'm only going to get paid a small proportion of the profit, even though it's a perfectly executed trade. So overall, no more than 50% of simulated profit should be made in any one day. Again, I could be a news trader trading massive news around non-farm payroll. That could be my biggest day of the month, and the rest of the month I find nothing to trade. But again, because I've made all my profits in one day, they're not going to pay it out. So I think this number of positions will catch the most people out, because as traders, some days are good, some days are bad. We might place a lot of trades or no trades. But what they're saying in here is that they will look at all your trades and therefore work out the maximum trades you place in a day. And therefore you should always be placing at least 25% of those trades every single day. And should this be violated, you're going to have to pay a reset fee. So as we can see with their consistency rules, it really has stacked in their favor. It's very difficult to calculate the number of trades you're placing per day, and therefore have to have that as a minimum. Looking at the percentage you can make in a certain time window of placing a trade, you've got to let all the trades run. It really restricts traders from placing what they want to do and when they want to do it. Now, there's a lot of prop firms have some really bizarre trading rules, but some people like them. So I'm not going to say that there's going to be nobody trading this. I'm sure that some people go through, have a review, and actually like the set of rules because they like that style of trading. But for me, this is one that I could never trade again. I hope you've enjoyed me trying to break down the consistency rules. I still think there's a lot of work to be done to try and fully understand them. And again, I'm not going to spend too much of my time doing it because it's, again, not a prop firm I'm going to put my money into now. Hope you enjoyed the video, and I'll catch you again soon. Cheers.